What are the hidden truths behind today's tumultuous market conditions?
Join financial luminaries like Axel Merk, Stephan, and David Lin, who uncover the insights driving current economic events.
We've transformed their hours of analysis into concise, AI-powered summaries that save you time while keeping you informed.
From predictions on gold and silver prices to strategies for the year 2026, this compilation reveals insights that can shape your investment decisions.
Stay tuned as these experts reveal critical trends affecting your financial future. In today's analysis, we explore the implications of U.S. involvement in Venezuela.
David emphasizes potential geopolitical tensions, particularly related to oil markets.
David Lin points out that U.S. actions might increase geopolitical conflicts in the region.
The guest suggests that this instability could cause fluctuations in global oil prices. The expert notes that Venezuelan oil production is critically low, and U.S. actions may destabilize the industry even further.
David highlights that current sanctions have already severely impacted production. According to David, the U.S. strategy appears focused on securing oil resources for geopolitical goals.
The guest reinforces that understanding these motivations is key to anticipating U.S. actions. David discusses broader implications for regional stability, suggesting neighboring countries may face increased pressure.
The guest elaborates that ongoing unrest could lead to higher refugee flows into neighboring states. What predictions do they make regarding the economic impact of these actions?
Both David and the guest agree that a spike in oil prices is likely if the conflict in Venezuela escalates. Regarding long-term stability, David notes that the outlook for Venezuela's economy remains uncertain.
The guest agrees, suggesting regional powers will likely react strongly to increased U.S. influence. To conclude, it's vital to monitor ongoing geopolitical developments in Venezuela.
David highlights the importance of these events for global oil prices and potential humanitarian issues.
Both speakers emphasize that understanding this situation requires vigilance and critical analysis. Today, we're reviewing investment strategies for 2026, as discussed by Stephan.
Graham emphasizes the significance of evaluating technology stocks, real estate opportunities, and emerging markets.
Stephan identifies technology stocks as a resilient investment focus for the upcoming year.
He points out the potential for high returns, especially in sectors like AI and cloud computing.
What about real estate?
Graham notes that despite market fluctuations, real estate remains a stable investment option.
And he highlights emerging markets as areas of potential growth as economies rebound.
Graham argues that an investment in technology stocks, especially in AI and digital services, is crucial for long-term growth.
Why is he so confident about technology?
He believes that innovation in these areas will drive market expansion.
Graham suggests that residential real estate continues to shine, even with economic uncertainties.
This demand indicates a strong rental market, providing a steady income stream.
What about emerging markets? Does Graham see potential there?
Yes, he sees these markets as ripe for investment, especially as economies start to recover.
What does Graham predict for technology stock growth next year?
He anticipates a potential gain of 15 to 20% as demand for technology surges.
And for real estate?
Graham forecasts a steady appreciation between 3 to 5%.
Graham concludes that investors should watch technology sector trends closely as indications of recovery emerge.
He also advises evaluating real estate markets for sustainable investment options.
Finally, diversifying into emerging markets will be crucial for long-term growth.
Today, we're delving into analysis of commodity prices, featuring insights from Dr. Emily Brown and commentary by David Lin.
Dr. Brown discusses how various factors contribute to significant volatility in commodity markets.
Dr. Emily Brown highlights that current volatility in commodity prices is unprecedented and closely connected to supply chain issues.
David Lin remarks that these fluctuations reflect more profound economic shifts and policy decisions.
What does Dr. Brown say about supply chain impacts on commodity prices?
Dr. Brown indicates that supply chain disruptions significantly contribute to escalating prices, showcasing the fragile balance within commodity markets.
Can Dr. Brown elaborate on market reactions to external news?
Dr. Brown explains that investor sentiment can worsen price fluctuations, resulting in unexpected market responses to news developments.
What forecasts does Dr. Brown provide for future commodity prices?
Dr. Brown foresees sustained volatility, suggesting we prepare for potential price corrections as markets readjust.
In conclusion, Dr. Brown emphasizes the importance of staying updated on supply chain changes as they significantly affect market stability.
Furthermore, it may be necessary to modify investment strategies to navigate ongoing market fluctuations.
Today, we're discussing Axel Merk's analysis on silver and copper prices, particularly focusing on silver's recent trends.
Merk emphasizes that these price movements are tied to strong market fundamentals.
What does Axel Merk say about the fundamentals supporting these prices?
Merk points out that both industrial and investment demand contribute to solid pricing levels.
How does Axel Merk justify silver's rise?
Merk notes the increasing demand from both investments and industry is driving silver's price upward.
What insights does Merk provide regarding copper?
Merk states that growth in construction and tech is fueling demand, which will support copper pricing.
What are Axel Merk's predictions on the future of these metals?
Merk anticipates silver stabilizing at high levels and predicts that copper may see further price increases due to strong demand.
What does Axel Merk recommend for investors?
Merk suggests paying attention to the underlying market fundamentals and considering both metals as valid long-term investment opportunities.
Today, we're diving into an analysis by Howe on current market risks.
Neil highlights that we face risks that differ from previous patterns.
Neil emphasizes that understanding past cycles can help predict future trends.
He notes that these patterns suggest that we may experience increased volatility. Neil points out that historically, economic cycles have led to corrections.
Are we witnessing similar trends today?
Yes, there are indications that history may be repeating itself.
What predictions does Neil offer regarding market conditions?
Neil predicts increased volatility linked to changes in societal behaviors. Neil suggests that investors reassess their strategies.
What types of investments are recommended?
Neil recommends focusing on historically resilient investments.
What are Neil's long-term market predictions?
Neil warns that unguarded actions could alter the market landscape dramatically.
In summary, Howe urges us to brace for substantial market volatility.
Investors should adapt their strategies based on what previous cycles have shown.
Staying informed is key to navigating these dynamics. Today, we're exploring the insightful analysis from Doug Casey, as presented by David Lin, on the risks facing the economy.
Doug Casey warns that we are on the edge of a massive economic depression, highlighting specific asset classes that could either collapse or thrive.
Doug Casey argues that the current economic scenario is unsustainable and may lead to significant downturns.
He also discusses how traditional safe haven assets could come out stronger in the upcoming crisis.
What indicators does Doug Casey highlight as signs of economic distress?
Doug notes that the increasing volatility in markets suggests an impending recession. Doug Casey recommends that during these uncertain times, diversifying portfolios could be key to preserving value.
What specific assets does he suggest could thrive?
He mentions commodities and tangible assets as potential safe havens.
What predictions does Doug Casey make about asset performance?
He predicts that while some assets may face collapses, commodities may see significant price surges due to their intrinsic value.
Doug concludes that staying informed and making proactive financial decisions will be vital in this turbulent economic landscape.
He encourages investors to closely monitor market indicators and adjust their strategies accordingly.
Wow, what a rich tapestry of insights we've woven today.
Absolutely. Doug Casey, Howe, and the others have really shone a light on how uncertain our economic future is.
Right? I mean, Casey was quite bold talking about potential asset collapses, while Howe emphasized those cyclical patterns.
Yes, and it's fascinating how they all pinpoint the need to stay alert in these turbulent times.
And don't forget Axel Merk. He's so optimistic about silver and copper, which got me thinking.
Indeed, but Dr. Brown's caution about volatility is something worth considering too.
There seems to be a blend of hope and caution here, making for a stimulating discussion.
It's clear that while they agree on the need for vigilance, they have differing views on what factors will shape our economic landscape.
If you enjoyed these diverse perspectives, make sure to like and subscribe.
Your engagement keeps us sharing these vital discussions with you.
And don't miss our next video. We'll dive into how global events could further shake the markets.
Thanks for tuning in, everyone. Until next time.